Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What's going on in the markets? Well, we continue to make new high after new high after new high. You listen to the mainstream media, this market can never, ever, ever come down. We're going to the moon. Just ask your local moon boy. Now, the moon boys also thought that, well, Bitcoin, it was going to the moon, right? Okay, it was up here at $74,000. What happened? Down 25%. Can the stock market do that? Sitting up here at record highs, down 25%. I'd say it's possible. You see, the Moon Boys said Bitcoin could never come down. Mainstream media is saying stock market can never come down. Now, we are in this crack-up boom. I'll be the first to admit it. You don't want to bet against the crack-up boom until it's time. When's it time, Tall Mike? When we drop below the 20-day moving average. Now, we've dropped below it one time since last October. Last October we just run straight up. The crack up boom, as I would call it, came down below the 20-day in April, didn't stick. Came right back above the 20-day. I think the next time we drop below the 20-day, I think it will stick, and I think we will get that 25% drop in the stock market. That's just my take. Maybe we just keep going up, but I don't see it. Now, I'm not saying to bet against the crack-up boom. No, sir, I am not. I'm saying this can go a lot farther, a lot higher. Maybe we get to 6,000 on the S&P. Maybe we break through that 40,000 on the Dow. It can continue to go higher. But when we do get below the 20-day moving average, I think there's a lot of room to the downside. And I think this can come down an easy 20, 25% in the flash, like one day, right? Okay, that's just my take. Everybody's got their own take. Your take's probably different. Let's get over to the real estate market. Man, do I have some good news. I got some good news for you today. Hey, I was reading this article and the experts, they all got together and they said that there is no chance of a housing market crash. No chance. Impossible. Couldn't happen. What were they saying in 2006, 2007? Exact same thing. What happened in 2008 till 2012? Dropped 34%. 34%. But once again, like the stock market, they say it can't come down. The experts got together. No chance of a housing market crash. Lawrence Yun, he's the chief economist for the realtors, right? Okay, no immediate no indication of a collapse. None whatsoever. No indication. We have strong job creation. Really. Strong job creation. He hadn't heard about all the layoffs. Apparently he doesn't know. A lot of stores are closing. Where do those people go? They go away. They don't have jobs. A lot of layoffs. Most companies are laying off. There's not strong job creation. You get people losing their jobs, you're going to have a little problem in the housing market. That's just my take. Now, the article does go on farther to explain how to prepare for the crash. There's no sign of a crash, but yet the article's telling you how to prepare for the crash. Very fascinating to me, you know. Okay, so let's say what they say about preparing for the crash. To prepare for the crash, you must make a down payment as much as you can afford. You bigger down payment, that way you've got instant equity in the property. So you're buying $1 million house, put down as much as you can. That way you've got instant equity, and when the crash happens, all that equity will get wiped out. Does that make sense to you, to put down more so you can have more money lost? Doesn't make a lot of sense to me, but here's also what the article went on to suggest, that you make extra payments to your mortgage. That way you will increase your equity, so when the crash does happen, you'll have more money lost. This article, I mean, you can't make this stuff up. Who writes this stuff? Yahoo Finance, they never cease to amaze me. All right. So now they say the housing market can't crash. The stock market can't crash. All right, now you're listening to Tall Mike. Let me tell you what I think. I think they both can crash at the same time. Okay, a lot of people think I'm down on real estate because I'm calling for the crash in real estate. Look, I'm not just calling for a crash in real estate. I'm calling for the everything bubble to pop. And it will pop, I promise you. When? I'm not exactly sure. Do we have 3 years left? Probably Probably not. But when everything bubble pops, you're going to see the stock market crash, going to see the housing market crash, going to see the bond market crash. But Mike, the bond market can't crash. They're going to lower rates, and that's going to push bonds up higher. It's going to push the short end of the curve up higher, right? They control that 3-month to 2-year, right? By how much they lower rates or how much they raise rates. But here's the thing. When they lower rates, I'm not expecting the long end of the curve to come down. Everybody else is expecting it to come down. I'm not expecting it to come down. Now, I was in the gym working out just yesterday, and I ran into my old economics teacher. Now, me and him, we get along real well, right? You see, most of the people I don't get along with so well because they have different viewpoints, and they're entitled to their viewpoint. But I get the comments in the section, Mike, you're an idiot. Mike, you're clueless. And maybe I am an idiot. Maybe I am clueless. Maybe they have it all right, but I got to give you my take. And when I was talking with my economics professor, me and him, we think a lot alike. We're trained in Austrian economics. Now, Austrian economics is a little different from the Keynesian economics that they practice at the Federal Reserve. You see, Keynesian economics says that the Federal Reserve, they can fine-tune this economy. They can raise rates. They can lower rates. They can print more money. They can take money out. They can buy mortgage-backed securities. They can buy stocks even. They can buy bonds. They can trigger it all. They're just going to fine-tune the economy. We're never going to have a problem again. Well, that's not what that's Keynesian economics, right? Where the government fiddles with everything. Now, what we practice is Austrian economics, where we let the free markets work. Now, you see, this has been broken since 2008. We're just in an extension of this. Now, let me ask you a question. How long does a fiat currency on average last? A fiat currency, one that's not backed by anything, history would tell you anything, it lasts 36 years. 36 years, that's interesting, huh? When did we go on a fiat system? Anybody know the answer? We went on a fiat system when Nixon took us off the gold standard, right? So 1971, we went on to a fiat system. Now, 36 years, 71, right around 2007. Now, I say it broke in 2008, so we'd be off a year. Now, since then, all we have is this fake economy, this fake stock market, this fake housing market. We print trillions and trillions and trillions of dollars to keep it propped up. And what happens when we print the trillions and trillions and trillions of dollars? Well, your purchasing power, it goes away. Maybe you're noticing this. Maybe you're noticing it at the gas pump. Maybe you're noticing it at the grocery store. Maybe you're noticing it with your latest utility bills. Maybe your insurance on your car has gone up. Maybe your house insurance has gone up. Maybe your medical insurance has gone up. But that's what happens when you depreciate the dollar. See, the dollar is being devalued. Now, it's lost. Now, in my opinion, it lost 100% of its currency value, right? Okay, it's lost all its value. Now, the Federal Reserve admits that it lost 98% of its value. They want that last 2%. Now, I think that 2%'s already gone. The only thing that makes it real is that you have confidence, right? Because in the United States, we got the weapons, and we say that we're going to take dollars, and this is the form of payment. Okay, so maybe we still got that 2% left, but you're going to see that really diminish. You're going to see it going down really, really fast. See, if you can get out of the system, I recommend the coin of the realm. It's called anything pre-1964 in the silver, the dimes, the quarters, the half dollars, the dollars. You want to get out of the system. The system is going down. It's been going down since 2008. Now, back around that time, I don't have the exact years, but you see, I was buying gold back then for $300 an ounce. What's it at today? I don't know, $2,400, right? Went from $300 to $2,400. Did it really go up? No. They print the money, and the money really goes down. So if you're in the system, you're holding all that, you're the big loser, right? You're losing out. But if you had your money in real money, the coin of the realm, if you will, in gold and silver, you would be doing just fine because that keeps going up. And it's going to continue that way until the dollar completely goes away, and it'll go away. It's going to disappear. They're going to reset it. Now, don't trade your gold and silver in on the first reset. Why? Because they're just going to trade it for another fiat currency. It's going to be a digital fiat currency, central bank digital currency. Okay, that's going to come out, right? Maybe they trade 100 a year dollars for one of those dollars. I don't know how the reset will work exactly, but it's not time to trade your gold and silver in yet. You see, you have to get back to sound money when they actually bring it back into effect, where gold and silver becomes real money again. Then things will correct themselves. That's Austrian economics. Now, what could bring the market down? As I'm talking with my econ professor, right? I'm having a good time. We're just talking about everything, right? Because we love this stuff. We're obsessed with this stuff. Maybe we're both clueless, but this is what we've come up with, right? What's going to bring it down? Look, here's the problem. Here's the problem. You get one bad bond auction. One bad bond auction. See, what they're doing is they have to sell these bonds, right? To support the debt, they need to print more money, right? And in the next 12 months, they're going to have to, we got $9 trillion of bonds rolling over. So they got to sell those $9 trillion, but we're going to print an extra 2 or 3 trillion that we don't have. So bring that number up to about $12 trillion. Now, who's buying these? The problem is nobody wants them anymore because the emperor is not wearing any clothes. The dollar is going to go away. So you're going to get one bad bond auction and you're going to see the long end of the curve. Maybe they can bring that short end down. They're going to lower it to zero to help out the economy, to keep it propped up. But you're going to see the long end, the 20-year, the 30-year, you're going to see them spike like you've never seen before. And this is just one bad bond auction. It could happen any day. It could happen at any time. Nobody knows what's going to happen. I don't know. I'm not that smart. I just know it's going to happen. And when it does happen, you're going to see that long end of the curve go from 4 or 5% to 10. 15, 20%. Then what are they going to do? Oh, they're going to lower the rate, but they're already going to be at zero, right? Well, they're going to have to bring it negative. See, that's when they're going to bring in the reset. They're going to bring in the central bank digital currency at that time. And once they're in the central bank digital currency, they can bring rates below zero. Not just real interest rates, but nominal interest rates below zero. Every dollar you have in your bank, they can bring it to negative 5%. End of the year, you have $100 in the bank. End of the year, you have $95 in the bank. But Mike, I'll take my money out of the bank. You can't. It's digital. That's why they want you in that digital currency, so they can have a negative interest rate on the digital currency. They want to get rid of this currency. They want to get rid of gold and silver. Look, eventually this is all going to blow up. And the only answer is to go back to sound money, to go back to gold and silver. But Mike, there's not enough gold and silver to go around. There's plenty of gold and silver to go around. It's worked for 5,000 years. People just are going to have to reprice the gold and silver so that everybody can get the right amount, right? Okay, so they reprice it, right? What are they going to have to reprice it at? It's scary numbers. Nobody's going to believe it if I'll tell you anyways. Gold's going to have to go to 50,000. What's silver going to have to do? I don't know. Let's call it 10 to 1. Let's call it 20 to 1. I don't know. 20 to 1 ratio, gold to silver. It's going to be a lot, over 1,000, right? Maybe over 2,000. Who knows? But we're at $30 right now. Right now, you can get out of the system and get into the real system, the one that's real, the one that's worked for 5,000 years, and protect yourself from what they're doing to you. And what they're doing to you, they're going to continue to do it again and again and again. But we crashed back in 2008. The system's been broken ever since. Is all that's happened is we printed 40 trillion dollars, and we're going to keep printing to keep the system afloat. It's dead. They keep whipping the dead horse, right? Trying to get the horse to run. It's dead. The dollar's over. It's going away. You want to get out of the system. You do what you want to do. I'm getting out of the system the best I can. Yes, I still have money in bonds and stuff because you need some. You need some dry powder. There's not exactly, nobody knows exactly how this will play out. Maybe gold comes down first and then spikes up, right? Maybe silver comes down first and then spikes up. But I'm telling you, those are real. That's the real system. They're going to have to go back to that because nobody's got confidence in this dollar anymore. The dollar's broke in 2008. They took us off they put us on a fiat currency in 71. Lasted for till 2008. broke in 2008. Now we're just printing trillions and trillions and trillions and trillions. And this is not going to end well. And when we go back in history and look at this stuff, they're going to realize what stupid idiots were running this country. And we got to kick those people out. We got to get rid of them. Look, if they don't want to go back to sound money, if they want to continue with their trillions of dollars of printing, then they have to go away. Now, do you want, okay, I'm going to go a little bit long today. I get a little carried away here because I got another point to make. Do you want to live in a country that's never, ever has a recession? People think recessions are bad. No, recessions are good because they get rid of the bad investment, get rid of the bad businesses, washes everything out. But you see, the Fed, they think they can keep printing money and we can never have one again. Now, here's the drawback to that is you're going to see prices keep going up and up and up because your dollars keeps going down and down and down. Now, do you want to live in that type of a country? I mean, we're at the point right now. Me and my economics professor, I mean, we were just laughing yesterday, right? I mean, they don't even allow a down day in the stock market. Stock market's got 2 down days. Get that plunge protection team in, print some more money, buy the debt, right? That debt, but they buy the debt, that pushes the market up higher. So, but once again, when they do that, prices go up, the dollar goes down. The dollar's going away. I would rather see a true economy that has recessions into it that are a good thing to wash out the bad investment. Look at these zombie companies that are out there, 20% of the S&P, they don't belong in business anymore. They got to go away, but they just keep giving the money, print the money, give it to the business, right? And the business has a bad plan, so they just lose the money. Got to keep printing more money, right? Give it to the businesses. We got to keep this thing going as long as we can. We got an election coming up, for God's sakes, Mike. We have to get past the election, right? We can't let it crash now. Look, you got to... Election, very important. Get rid of these people. Anyone that won't go back to sound money, just get them out of office. It's time for them to go. They cannot continue to print trillions of dollars. It is not good for you. It is not good for me. That's just my take. I'm Tall Mike. You give me the thumbs up if you like this stuff. Punch the subscribe button so we can talk some more. Bye-bye now.